Hi guys, welcome to Investing with JYK, and today we'll talk about a almost hidden monopoly in China that deals with air travel. There's a company called TravelSky, and it was formed by, well, a little bit of history. So China before 1987 was really not into the whole market economy thing. So all the aviation business was controlled by what's known as the Bureau of Civil Aviation. And that stuff then set up the big four in China. You got the Air China, you got the South Air, sorry, Southern China Airlines, I think. It's like China Southern Airlines, yeah, and then China Eastern Airlines. Actually, big three. Sorry, yeah. So these were set up in the 1990s, and but they still wanted some kind of uh, shared service. So they then set up this TravelSky thing, which essentially is a service provider for all the aviation, all the airlines, and they then later branched into like airport services and stuff like that. So that's the I would say the origin of this company, and um, essentially it's a monopoly, and there is no other choice than to use TravelSky for the distribution of your tickets, the ticket prices. So, for those who don't know, airlines utilize what's known as global distribution systems, or GDS, to distribute the fare to the retailers. So if you go to orbitz.com or go to expedia.com, or if you go to, I don't know, like Kayak or anything, they basically pull the data from GDSs and aggregate them. Um, and one funny note, well, not funny, interesting, that Southwest in US does not participate in GDSs. So you can never check Southwest's ticket price on a let's say Expedia uh, or Kayak. You have to go to Southwest website, and then GDS I think charges like $1 or two per each ticket sold. So Southwest is essentially cutting like $1 or two on each ticket sold. This is kind of interesting, but this also tells you that GDS is almost a perfect business if you think about it. First, they don't need constant capital expenditure because they don't actually own the planes. They have some software that people use. And secondly, they are inherently monopolistic. Like, it's a network. So the more a GDS, um, the more airlines that GDS connects to, the more likely the airlines will connect to it. So it's clearly a network effect. And on top of it, TravelSky is essentially, you can think of it as controlled by the Civil Aviation Board. Um, it's indirect, but essentially, Civil Aviation Board or Bureau, or whatever you call it, owns the majority of China Eastern, China Southern, and Air China. And then, in turn, these three companies own a large portion of of TravelSky. I think you can see it somewhere here. Let's see. Damn it. Let's see if we can find it. Here. So it's actually through multiple ways. You have this group, which is essentially owned by the Civil Aviation Bureau, and you have China Southern, which owns 17%. I think this is the important part. So 12%, 29%. So a majority of China Southern is controlled by the Aviation Board. And if you go down, you can see China Eastern controls 11%, and then Air China controls about 10%. So now you got a government backing to reinforce its natural monopolistic tendencies. So essentially, you end up with a monopoly. Okay, so let's look at its business. What are they in other than GDS? So they have a Chinese website, and I know that maybe it's not easiest to understand, but they do have an English website as well. So if you go to, they have like many segments. They're in every single thing. So they have like all these self-check-in things. You know, in the airport, you have these kiosks, and then they basically build those, and they also handle the connection interlining, they call it, between airlines. So when you paid a particular airline for the bag, for example, and then the bag needs to be carried forward, the first airline has to pay the second airline, so there's some kind of clearing process going on there, and so they handle that. And they have all these things, departure control and all that stuff, and then they also allow the publication of different fares, which is GDS basically. Oops, I clicked on something. If you're interested, you can click into each one of those. And they also recently, I think they built this platform to allow more customized fares. So you can now have what's all add-ons. I would call them add-ons. So I would say like for an add-on could be say refundability. That would be an add-on, or an add-on would be Wi-Fi, right? So those are the things. So when you buy a ticket, you can choose these add-ons, and they essentially provide those. They would be able to incorporate that add-on into the PNR, the passenger. I think it's called passenger number record or something, which it's the 5-6 digit thing that you get whenever you book an airline. So that's that, and then you have also these IT services. You can see that's the distribution IT service, airport IT services, and airport information. So essentially everything to do with air travel. And bear in mind, this is essentially a monopoly. It does come with its own problems, because then the government can tell it to build certain things. A recent example would be the ability to recognize residence cards. So foreigners in China might obtain residence cards, and TravelSky was dictated to build the recognition function for these residence cards. I'm sure they weren't paid additional for their efforts, but that's also a price you have to pay in China as a monopoly, especially a government monopoly. Right, so let's look at their finances. Okay, so in 2017, you can see the revenue is increasing, and then it's broken out into multiple, but essentially the majority is in this aviation information technology services, and majority of that is just the GDS. And then, as I said, GDS is a very simple business. I call these brain dead businesses. So some of the brain dead businesses are airports, toll roads, and this is another brain dead thing. So basically, you have a software that's running, and then the airlines will connect to you. In this case, you don't even have to acquire them because the government says you have to connect them. So the airports will connect to you, and for every ticket that gets sold, for almost zero marginal cost other than electricity, you get paid $1 or whatever. Right? So it's a very simple business. High margin, simple business. And so that's the majority of the revenue. That's 3.8 billion yuan. So divided by 7, you end up with dollars. So 500 million per year. And then you got this accounting thing. So that's the clearing services I was talking about, your interlining and all that. And system integrations is one of the least, it's one thing that I care about the least. So that's actually deal based. So it's like implementation. You have some deal, you have to implement it, and you go in, you build a bunch of software, and then it's a one-time charge. So these are not recurring revenue, but these are all recurring revenue. And data network, I forgot what exactly it was, but let's see if it says anything about data network. I forgot what this was. Good, doesn't tell me anything. Let's check the Chinese one. The Chinese one, as you can see, is much longer than the English one. It's 191 pages. This whole thing is only 28 pages. So sometimes it still pays to be able to speak Chinese. Let's see what it says. Data, okay. All right. So yeah, this is another brain dead business. It lets them. It provides check-in, transfer, and interlining for passengers. So that's that. There's a front end for I'm not quite sure what the hell this is. It's probably let's see. So it's probably app in China is basically always going to be mobile app. So some kind of mobile app that they provide for multiple airlines and airports for check-in, transfer, and interlining. So whatever. It seems like a convenience thing you would want on your phone, and they're the one that's providing it. And that's a fairly significant portion of your revenue, about say 20%. Less than 20%. Sorry, more than 20. 25, close to 20. Yeah, close to 25%. Okay, so it's growing fairly healthily, 500 million more than the last year. The only thing that went down is really the integrations, which is one-time revenue that's bound to be volatile. And you got the expenses. The majority of the expenses personnel. So basically, the cost is people. So that is one risk. And government-run entities are hardly known for their efficiency, so the personnel expenses probably won't go they probably won't pay too much attention to keep a tap on this. And you can see the growth is fairly significant. But overall, the growth on operating expenses is less than the growth on total revenue. The revenue went up 500 million, and then the operating expenses actually only went up 200 million. And you got operating profit going up, and then there's last year there was a fairly big government grant. So what ended up happening is the profit was actually lower than the previous year, but these grants are one time. So again, it's if you exclude that, you actually had increasing profit as well. And their cash situation is extremely positive. So if you look at their since end of last year, they have zero debt essentially. If you look at them, what their assets comprised of, you got some property, plant, equipment. So basically, these are the machines. They probably either the machines or computers, and they have some kind of lease for land use. And the last one is some financial assets. They're actually into a lot of equity investment into random things, which I don't think necessarily is a good thing, because a monopoly business is pretty nice, and it's hard to find another one, right? So those are the non-current ones, and that's whatever it is. And you got current assets, you got receivables, a bunch of receivables. In fact, they have a shit ton of receivables, and then they also have a lot of receivables from related parties. And if you think about it, it makes perfect sense, because a couple of their large shareholders are their clients. You've got the big three airlines in China. And then you look at cash. They have a bunch of cash. So they have 3 billion yuan in cash. And then which is quite a lot. That's, if you compare that as against the property, plant, equipment, that's essentially almost equal to that. They have a lot of cash. And in terms of in terms of liabilities, if you go down, you can see that they have some deferred revenue for the long-term ones, deferred income liabilities, so tiny peanuts here. And then they have some payables, which almost is equal to their receivables. So yeah, so essentially this is a company that has zero long-term debt, nothing interest-bearing, a bunch of cash, a very stable business model, because all that needs to happen now is for the Chinese to keep flying. As long as Chinese keep flying, they will keep getting more revenue. And they don't necessarily need to increase that much. They don't need capital expenditure to serve additional demand, because this is what they have is essentially software. So yeah, so that is this company, and everything looks pretty nice. And if you look at, I mean, you could look at cash flow, but it's kind of unimportant. I don't know what the cash flow is. Oh yeah, here it is, another one that's kind of important. You can see some of you do have provision for impairments of receivables. So I'm not quite sure what exactly these are, but seems to be reasonably under control. And if you think about who should be paying them, it's either airports or airlines. So unless some of these go bankrupt, I wouldn't worry too much. And the other thing that I would like to point out is they have some what's known as wealth management products, which is kind of stupid, because they're getting 3.3% on their cash. I mean, if they distributed that cash to me, I'd probably get more than 3.3%. So I don't quite like that, but it is what it is. It's, government monopoly, and as long as their business doesn't deteriorate, I'm not too unhappy about the way they operate. And yeah. And here's a business overview, and if you want, you can read about it. If the data thing is Actually, it doesn't say anything here, but so yeah, so it's a quite healthy business. Now, next thing we should be looking at is profitability, right? So, sorry, valuation. So valuation, if you look at the past prices, looks like this. And if you look at here, it says the forward earnings like 18.6, but that's actually not too good because that's by guessing. But if you look at here, PE is like 19, basically. That's TTM. And so which is not too bad. And PB doesn't look too high, but this again is an ADR, and this is on Seeking Alpha, which I don't fully trust. Their payout ratio is fairly limited, and then their dividend yield isn't very high, but they seem to be increasing all the time. If you look at their dividend history, this is what happens. You can see in 5 years, it keeps increasing, essentially. Aside from this one, you got like a special dividend. I think they're trying to cover up for the previous one. It only went public in 2002, I think. So you got essentially increasing in dividend, and 2015 is when China had a slowdown, and you can see that actually the dividend actually went down in dollar terms. But if you look at this website, Li Xing, I made a video on this one before. You can see the valuation from since it went public, and the median is about 14, 15. Currently, it's higher than its historical value. So I would say I would wait for a bit more to, for it to fall down lower. And in terms of PB, same story. You got a median of about 2, and currently it's about 3. Right? So if it goes down a bit more, price to sale, same story. The blue line is is the current valuation, and dividend is currently fairly low. It's the highest it has ever been is about 7, I would say 8. Right, so now a couple of things to think about in terms of when is a good time to buy this company. First thing that comes to mind is economic crisis, because that's when people stop traveling for business and for fun. So when they stop doing those, the revenue will take a hit. But again, they don't need constant capex. Like, they can certainly stop capex. If you think about what they use capex for, they essentially build new software and sell it to airlines, right? So if there's not enough revenue, they simply cut they could simply cut the R&D and essentially fire these people. But given that it is a government entity, they probably will not fire these people. But this company has no debt, so worst case, when it really comes to it, they can raise debt. And the other thing is when there is a pandemic. Same story. Sorry, an epidemic, I meant. You get some kind of infectious disease like SARS in early 2000, nobody travels. But as soon as that recovers, people will travel just like before. Once the scare goes away, everything recovers. So it's fairly certain once these things go away, And you might want to ask, okay, so what make you think that these problems will go away? I don't know, but if if some diseased epidemic does not go away, then what's going to happen to the rest of the business world? People will stop moving, okay, and then people will stop doing business. They will stay at home and not spend any money. Clearly, it's going to be a huge economic contraction. Yeah, so I think this is one of the companies I will keep my eye on and wait for it to drop down to low valuation. And I think it's one of those companies that will just sit there and print money, and it's kind of invisible because, like, who cares about some company that makes $2 off and $1 off any ticket, an airline ticket, right? So people would think, when people think about air travel, it's usually airlines. And the next level, people may think about, say, airports, and the next level is like the duty-free shops in the airports, right? So there's a bunch of associated industries. This one is a government monopoly that is naturally monopolistic. So great barrier to entry and no competition whatsoever. And competition is what you don't like if as a shareholder. Competition was what you like as a consumer, but not as a shareholder. So yeah, so this is what it is, and I will keep an eye on this one, and hopefully it will go back down to start paying 5-7% dividend. That would happen if the China scare goes even more, or some disease started spreading, or the global economy goes crazy. But at the moment, great business, too expensive. That is it for today, and see you next time.